All right, hi everyone. Welcome to today's webinar brought to you by IronFX. Right, thanks all for tuning in. I just want to make sure you guys can hear me loud and clear and see my screen as well. I should be looking at breaking news and setups. All right, so before we start, please take note of the risk warning that comes with trading on IronFX. Right, the products here are traded on margin and carry a high level of risk, and it's possible to lose all your capital. Also, please take note of the disclaimer that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. So just before we start, or before we dive into the charts on TradingView, right, we'll take a quick look at the economic calendar or what's left of the economic calendar for the rest of this week. Right, so up in a couple of hours, we've got the Bank of England releasing its monetary policy report, followed by the press conference by Governor Andrew Bailey. Right, so this is definitely going to be, this will definitely inject high volatility for the pound, and that means that like the major currency pair, like the cable pound dollar, is likely to see wild swings, while the pound crosses as well. Right, pound yen is likely to see strong movements as well. Right, then after that, we've got unemployment claims out of the US later today, and then we have UK GDP data tomorrow as well. Let's see. Okay, so this is the calendar from Forex Factory, right? This is what's coming up today and tomorrow, right? So take note, I'm on GMT time here. So at 11 a.m. GMT, the Bank of England will release its report, followed by Governor Andrew Bailey's press conference at 11:30 a.m. GMT, right? Okay, as you can see here, the forecast is for rates to be kept on hold, right? The official bank rate is expected to be kept on hold at 5.25%, right? That's widely expected by a majority of market analysts, right? So when we look at how this would be the sixth meeting, right? If the Bank of England keeps rates the bank rate at current levels, this would be the sixth time in a row where they have kept the rates unchanged, right? Part of the reason is persistent inflationary pressures are still present in the UK and have yet to fully to completely subside, and they're waiting. Policymakers are waiting for much clearer signals, right? Although they are optimistic as well about Britain's economic trajectory, right? So we'll come into this in the slides below. So if we look at inflation in the UK, on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized basis. Although you can see that they have retreated quite sharply from its high of 8.7% for headline CPI and about 6.9% for core, you can see that they're still well elevated, right? Headline CPI in March came in at 3.2% year over year, while the core remained at 4.2% year over year. Like both readings still well above the Bank of England's target of 2%, right? Take note, right? The Bank of England has an inflation target of 2%, just like the Fed. And as you can clearly see here, both the headline and core CPI are well above their target. Although core CPI has been trending lower over the last 6 to 8 months, that's a positive sign. However, when you look at headline CPI, it's actually stagnated and gone sideways, showing the persistent stubbornness of this index. So you can see here, headline CPI has proven to be sticky over the last 5 to 6 months without trending lower. So this is one of the reasons why the Bank of England is unlikely to cut rates later today. Another reason is the level of economic output, right? After falling into, or rather after declining in the fourth quarter of 2023, UK GDP actually declined by about 0.2%. And you can also see the PMI output registering readings of below 50. Remember, a reading below 50 indicates contraction for both the manufacturing and services sector, while a reading above 50 points to expansion for these two sectors, right? So as you can see here, both the manufacturing and services sectors of the UK have rebounded strongly in the towards the end or from November onwards, right, as reflected in the PMI or the composite PMI readings, right? Remember, reading above 50 indicates expansion and has rebounded quite strongly as well. So given that we are seeing inflation to be persistently sticky and well above the target of 2%, combined with a rebound in economic output, it is quite unlikely the Bank of England is going to cut interest rates later today. However, Governor Andrew Bailey could still lean on the dovish side during his press conference. So take note, the press conference could be critical to how the pound is going to move later on, right? Although they may not cut rates due to the factors we have seen here, but we cannot rule out the fact that Governor Andrew Bailey may lean on the dovish side with regards to future monetary policy action. Right, so that may be enough for the pound to sell off later today. So take note of that. Right, then after that, we've got unemployment claims out of the US. This data is released at 12:30 p.m. GMT. Just to think, and the forecast for this week is at 212,000, while last week's reading came in at 208. Now, unemployment claims is basically a weekly metric that tracks the number of Americans filing for unemployment benefits. Right. So if you see as an example here in the second quarter of 2023, when you saw claims rise strongly, and at the same time claims coming in higher than the forecast, this usually signals a potential weakening of the US labor market. So when we see claims rising strongly like this, and at the same time coming in higher than the forecast, typically the US dollar is going to weaken. Conversely, when you look at the third and fourth quarter of 2023, we saw claims start to trend lower. And not only were claims trending lower, they were coming in lower than the estimates as well. Take note, the blue bars indicate the actual reading, whereas the orange bars here indicate the estimate. So you can see here in the third and fourth quarter of 2023, claims started to trend lower and were coming in lower than their respective estimates as well. Now, and then with results such as this is typically going to function as a bullish catalyst for the dollar because that means the US labor market is still robust as less people are filing for such unemployment benefits. Now, coming to where claims have been coming in the first quarter of 2024, right? We can see over the last 4 weeks, not only have claims sort of stabilized around the region of 210,000, but they've also come in lower than their respective forecasts over this period as well. So when you have see claims sort of trending lower and coming in lower than its forecast, this usually functions as a bullish catalyst for the dollar, right? This could be a short-term bullish catalyst, usually will function as a short-term bullish catalyst. Now, how can we interpret this data? Right, so this week we've got a forecast of 212,000. So that means if claims come in greater than 212,000, this is typically going to function as a bearish catalyst for the dollar. Why? Because when you have more than expected people filing for unemployment benefits, this is a negative for the labor market. It potentially signals some softening of the US labor market, which in turn causes the dollar to weaken. And of course, that would mean currency pairs like the euro, pound, Aussie, and Kiwi are likely to rise along with gold. Conversely, if claims come in lower than 212,000, right, this means there are less people filing for unemployment benefits, which signals a robust labor market, which in turn should spur demand for the US dollar. So that would mean currency pairs like the euro, the pound, Aussie, and Kiwi are likely to fall along with gold prices too. Right, so this is how we can easily interpret the unemployment claims that are up later today at 12:30 p.m. GMT. And typically the result of this data point will have a pretty high impact or short-term impact on the direction of the dollar, right? So if we see claims come in greater than 212,000, we're quite likely to see the dollar index fall. And if we see claims coming in lower than 212,000, we're quite likely to see the dollar index rise quite strongly. Right. And then finally, tomorrow at 6 a.m. GMT, we have UK GDP, the release of UK GDP tomorrow at 6 a.m. GMT. Right. As you remember, after contracting in August to October of 2023, economic output based on the composite PMI has rebounded quite strongly since November onwards. Right, so that means we could potentially see another month of expansion with regards to monthly GDP growth. Right, so the estimate for March points to another month of growth. March is here, January, February, March, although it's at a much lower rate than the previous two readings. Now, should we see GDP, the actual result coming higher than 0.1%, then of course this is quite likely going to function as a potential bullish catalyst for the pound. So that means pound dollar or the cable is likely to rise following this news result. Should we see GDP come in stronger than its forecast? All right, with that, now let's move on over to the charts on TradingView, and we'll start the analysis on the dollar index, and we'll cover the pound as well, since we've got the Bank of England coming up in, I believe, an hour. So 11 a.m. Yeah, so in about a couple of hours. Yeah, we got the Bank of England coming up in a couple of hours. All right, okay, now let's dive into the charts on TradingView. All right, so I'm on the 4-hour time frame here. So we'll start the analysis with the dollar index. And of course, we'll cover dollar index, the pound, a few of the major currency pairs, commodities, and of course, should you have requests for any other instruments, be it the other major currency pairs or the crosses or even the indices, do not hesitate to drop your request in the chat box. And I'll be more than happy to go through the analysis with you. All right, so let's just start on the weekly first. Right, so on the weekly chart. So last week we had a strong pullback, a relatively strong pullback for the dollar index. It hit a high of 106.50 to drop as low as 104.55 before finally closing at about 105.10. Now it has rebounded this week, right? So although we had a bad miss in non-farm payrolls last Friday, which caused the dollar index to drop as low as 104.60, it was we saw we saw it actually rebound towards the end of last Friday's session, and as the new trading week got underway, we saw the rebound continue to extend for the dollar index. Now, should we see claims come in lower than its forecast for this week, this is quite likely going to function as a bullish catalyst for the dollar index, and that means we could likely to see it push higher later today, right? So that brings us now to the uh, daily time frame. So when we look at the daily time frame here, all right, hi Trevor. Yes, okay, for sure. Once I cover the dollar index and the pound, we'll move on over to the indices. Yeah, for sure. We'll cover the Dow, Nasdaq, and DAX as well. All right, great. Great to see the request come in. All right, okay, so but first we'll just start off with the dollar index and the pound, since we've got the Bank of England coming up as well, and then we'll dive into the indices. Right. So looking at uh the dollar index here on the daily time frame. Previously, this level here at 105.57 was previously had been identified as intermediate resistance. Why is that? Because we see a pretty decent pullback level here that has taken place from the 25th of April till the 1st of May. What was previously a pullback support level could potentially function as resistance, which did seem to be the case yesterday, right? We see the dollar index climbing as high as 105.63, but it pulled back to close at about 105.50, right? So this level here did function as a pretty decent resistance yesterday, but as you can see clearly, today it has broken above this level. Right, there was also a Fibonacci retracement that we could use that started from here, 1st of May, going down to the low here on the 3rd of May. We can see that this pullback resistance level also aligned pretty well with the Fibonacci retracement at 50%. All right, Trevor. Yes, sure. I'll zoom in as well. Once I go down, I'm going to start the analysis on the daily time frame, and then I'll move on over to the 4-hour time frame, and definitely I'll be zooming in as well. Right now, I'm just keeping it at this level of zoom to give you guys the to get an over and a bird's eye view of the dollar index, and then of course we'll be zooming down onto the lower time frame as well as zooming in into the charts as well. Right? No worries. We'll definitely do that. And of course, the first major resistance for the dollar index is at this pullback resistance level here that has taken place since the 16th of April, right? This is 106.37. So very clearly, this is the first major resistance for dollar index with the first support at this swing low here. So the candlesticks are not clear. Okay, okay, maybe it looks a little bit better because on my end here, it's actually pretty clear. The candles are in red and green. The colors are pretty vivid. Okay, maybe when I zoom in later might be a little bit better for you. But as of now, from my end, it looks pretty clear to me. All right. Okay, so these are the major the first resistance and first support for the dollar index. Actually, the first support, when you look at it, is actually a strong overlap support, right? Previously, we see dollar index finding strong support here in November of 2023, making a swing high resistance here on the 14th of February, making another swing high resistance here on the 2nd of April, clearly telling us this is a strong overlap level. And it did function as support as well, although it wasn't the best support level last Friday. But generally, you can see the body of the candle closing above this overlap, which does seem to signify that this level at 105 is still a very significant support level for the dollar index. Right, we can see very clearly the wicks dropping as low as 104.52. However, when we look at the body of the candle on the daily time frame, it has managed to stay above this level and has rebounded quite strongly. Right, there's also a Fibonacci retracement that we can use. Okay, one retracement will start from here, 9th of April, going up to the high here on the 16th. We can see, okay, is there a 51 or 61 that we could use? Okay, perhaps we can keep the 61 here. And there may be another Fibonacci retracement that we can use. This one, this time starting from here, the swing low of 8th of March, going up to the high here on the 16th. Let's pull up all the fibs. Right, we can see that the 38.2% Fibonacci retracement aligns pretty well with the first support too. So let's keep 38 for now. All right, okay. Now let's zoom on over into the 4-hour time frame and try and fine tune the analysis if necessary. Right, okay. So now when we look at the 4-hour time frame here, right, okay, we can see, of course, this pullback here taking place on Wednesday, yesterday, coming as high as 106.50. So I'm just going to adjust the first resistance a little bit. Right, so here no changes to first resistance. Previously, remember, this was an intermediate resistance at the 50% level. Let's see if there's any other, let's see where the 61.8% retracement lies, right? Maybe this could be the next intermediate resistance here, right? When the dollar index fell sharply yesterday, it did consolidate around this level of 105.75 before finally dropping lower. Oh, sorry, this was last week. Apologies, this was last week, last Thursday and Friday. As last Thursday and Friday, dollar index fell quite strongly. It did find support around this level here before finally going lower. So what was previously a support area could now potentially function as resistance, which also happens to be aligning very well with the Fibonacci retracement at 100%. Right, okay, so maybe this is the next intermediate resistance here. Now, should we see the dollar index break above this level here, especially if we see unemployment claims come in weaker than the forecast, that is going to function as a bullish catalyst for the dollar. So that means we could potentially have a bullish breakout for the dollar index later today. Remember, if claims come in lower than its forecast, it's quite likely going to function as a bullish catalyst, and that means we could see dollar index continue this rebound that has taken place since Monday, Tuesday, right? So take note of these levels as well. So we may have a potential bullish breakout opportunity on hand for the dollar index, right? Okay, with regards to first support and second support, I think that's fine. There's nothing else to really identify. If anything, I would identify this level here as a pretty decent overlap support, but it's going to be an intermediate support rather than a full support here. So you can see dollar index is sort of consolidating within this range now between 105.45 and 105.75. And should we see claims come in stronger or come in lower than anticipated, that means we may have a potential bullish breakout on hand. Conversely, if claims come in much higher than the estimate, that is likely going to function as a bearish catalyst for the dollar. That means dollar index is likely to break out of this intermediate resistance support at 105.47, and it could potentially drop all the way down towards the first support here at 105.04. All right, okay, so take note of that. Take note of how unemployment claims is likely to drive the direction for the dollar index later today. Right, it's actually quite hard to predict the actual number of claims coming in, right? So I would say wait for the data to be released, and once the data is released, we are quickly able to assess the the potential impact is going to have on the direction of the dollar index, and then we will still have an opportunity to get in on the trade, right? So if we see a bullish breakout occur because of weaker claims, that means we may have a pullback opportunity before continuing the uptrend. Similarly, if should claims come in higher than anticipated, that's likely going to function as a bearish catalyst for dollar index. So that means dollar index could break below this intermediate support, and we have a potential short opportunity, and we can target the first. We can target our we can identify our take profit for the short trade at the region of the first support. All right. No, thanks. Thank you very much, Trevor. I truly appreciate that. And I always help that, we get our analysis more right than wrong, of course, right? Because it's then beneficial for everyone involved, right? Thank you very much for the words. All right. Okay. Okay. So this is what we have for dollar index and how unemployment claims is likely to impact the direction of this index here. Of course, if dollar index is going to rise, then that means, of course, currency pairs like the euro and pound are going to fall. And conversely, if dollar index falls later, we see a potential reversal and it drops hard, then of course, euro and pound are likely to rise higher as well, right? Take note of that. Okay, next up, we have the pound. Remember, we've got uh, the Bank of England coming up in about a couple hours. Yeah, so in about an hour and a half, the Bank of England will release its monetary policy report, where they're likely to keep their bank rate on hold. Right, they're not going to cut anytime soon. It's quite unlikely they're going to cut today, and but take note, because Governor Andrew Bailey may lean on the dovish side during his press conference. Now, if he were to sound pretty dovish during the press conference, that means we are likely to see the pound sell off. Right. Now, so let's try and identify the key support and resistance levels for cable today, right? Quite clearly, first, okay, I'm on a daily time frame. We can also see that the pound is trading underneath or below the bearish Ichimoku cloud, which indicates strong bearish momentum, and we also have a strong, we also have a very clear descending trend line as well, right? We can see a very clear descending trend line where pound has bounced off this level several times. It's ran into resistance several times here, about 3 to 4 times. You can see with each retracement to the upside, it's run into resistance here and dropped quite sharply, right? Even on Tuesday as well, right? We saw Friday, of course, non-farm payrolls day, high volatility, but when markets reopened today, it tried to break out of this ascending trend line on Monday, but it failed to do so. And Tuesday onwards, we saw a nice reversal for the pound. Right. Okay. So we see a nice descending trend line, which has been respected since 11th of March. We also see the pound trading underneath the bearish Ichimoku cloud, which tells us it is still in a pretty strong bearish downtrend. Okay. So quite clearly, first resistance for the pound is going to be here at 1.2562. Right. This is a pullback resistance that has taken place since the 29th of April. And the first major support for the pound is at this swing low here that occurred on the 22nd of April, which is 1.2349. Right, okay, we can also run a Fibonacci retracement. There's a retracement from here. This swing high on the 8th of March going down to the swing low on the 22nd, right? I believe, is it a 38 or 50 that we can use? Let's pull up all the fibs. Okay, we can probably use the 50 for now. We can see price has already retraced above the 23 and 38. So let's just keep 50% for now and just highlight it as a zone here. Right, okay. There's also another Fibonacci retracement we can use, and that's from here. This swing low on 22nd of April going up to the high last Friday. We can currently see that the pound is testing another intermediate support level here. This is an overlap intermediate overlap level here at 1.2467. This will be a little bit more clearer once we go on into the 4-hour time frame. So this is a key level here. So should this level give way, it's quite likely the pound is going to drop lower, and especially if we see a pretty dovish press conference by the Bank of England or by the Governor Andrew Bailey, that's going to even that's going to add further bearish momentum for the pound, and we may have a potential bearish breakout on hand for the pound today. And should that take place, we can target the region of the first support, which is at 1.2350, as a potential take profit zone. Right. Okay. Now let's go on over to the 4-hour time frame and zoom in a little bit. Right. So you can see here as well. Okay. I'll just adjust the trend line a little bit on the 4-hour time frame, but you can see generally that this is a trend line, a descending trend line that has been respected several times. Right. And of course, we can see now, based on the 4-hour time frame, the pullback, the body of the candle actually goes as high as 1.2604. So let's just adjust that. And I don't need this now. Right, let's just see. So the first resistance is here. Intermediate support at this 50% Fibonacci retracement, which is a potential bearish breakout level here. You can see since 24th, or rather since 25th of April, this level has functioned as pretty decent support, right? With pound bouncing off this level 3 to 4 times since then. It's actually an overlap level here. You can see running into resistance here in mid-April, and towards the end of April as well, and then proceeded to function as support. So you can see this is a pretty significant overlap level here, where the pound does seem to have found support again based on the current 4-hour candle. It does seem to have found support around this region here. However, if we see a dovish outcome from the Bank of England's monetary policy statement, then of course we may have a potential bearish breakout at hand. So if that bearish breakout were to occur, take note, we can target the region of the first support as a potential take profit level. I would also keep an eye out on the 61.8% Fibonacci retracement level as well, right? This is another zone here that we can target as a potential take profit. So take note, if we see a dovish outcome from the meeting later today, or rather in about an hour and a half, then it's quite likely we may see a potential bearish breakout occur for the pound dollar, and then we can target the 61.8% Fibonacci retracement as the first take profit level. And should it break below this level cleanly, the next take profit level can be aimed at the 78.6% Fibonacci retracement, which is at about 1.2370. Right, so this is how we can use the Fibonacci retracements as well to help us identify potential take profit levels. Right, so take note, if we see that occur, right, bearish outcome during Bank of England's meeting, plus we see lower than expected unemployment claims in the US, both of these are going to cause the pound dollar to fall. And we may have a scenario or potential scenario where we get this bearish breakout take place. And then we can target 61 and 78.6% Fibonacci retracement as the take profit levels. Now, with regards to stop loss, right, we can see price making a little bit of a resistance here, right? Price making a small pullback resistance here yesterday, right? So this is at 1.2504. So we can identify a suitable, for any short positions that we may have for the pound, we can identify a suitable stop loss level that's going to be about 15 pips above this level. So that means stop loss would be identified at 1.2520. Right, so this is a 15 pip buffer that's just slightly above this pullback resistance zone here. So if we go short on the pound at about 1.2465 or 1.2460, right, identifying a stop loss at about 1.2520 is a suitable stop loss level to identify, because it's slightly above this little pullback resistance that occurred yesterday. Right, we always give ourselves a little buffer with regards to the stop loss. We will not place it at exactly the major support or resistance level, but slightly below or above it. Right, so this is what we have. This is what we have for the pound. Right, take note. And of course, if the opposite were to happen, right, if Bank of England comes out to be hawkish and we see unemployment claims come in higher than anticipated, that means the pound dollar is likely to rebound and bounce very strongly. Now, if that bounce were to occur, right, if that bounce were to occur, I would identify my stop loss below this intermediate support level here, right? This intermediate support level here is at about 1.2470, right? I would place my stop loss at about 10 to 15 pips below this major support level, and then For the take profit, I would target another intermediate resistance level here. Right, we can see this is a pretty decent intermediate resistance level here at 1.2540. Right, so this would be a potential take profit level for any long pound positions. And then the next take profit level can be identified close to this first resistance here at about 1.2595, right? So take note of how unemployment claims as well as the Bank of England's monetary policy statement and press conference is likely to drive the direction for the pound. All right. Okay. Now with that, let's move on over to the US 30. Right. Let's do that. So that's the Dow Jones. Now for indices, I like to start the analysis on a weekly time frame. It just helps us to truly appreciate how this index has been trading. Right. So the Dow Jones on DJ30 has made its all-time high here at 40,056, right? When we look on the monthly time frame and zoom out a little bit, we can see quite clearly, of course, this is the all-time high for the Dow. This has no doubt about that. Okay, so we do know that the all-time high was made in the week of, or in the first week of April at 40,056. Now, following that all-time high, the Dow pulled back quite sharply over a period of 3 weeks, but it does seem to have rebounded in this towards the end of April to move higher as well, and it looks like it's trying to uh, re uh, is attempting to reach the all-time high once again. Right, this the bullish momentum is still sort of intact. We can still see a very strong bullish momentum going on. So okay, let's start the analysis proper. So quite clearly, this is going to be the first support here, right? This pullback here that occurred on 8th of April is going to be identified as the first major support for Dow. So that's at 37,981, right? First major resistance is, of course, close to where the all-time high is. Or well, it's, yeah, let's just pick the all-time high as the first resistance, of course. Just like to highlight this as a shaded area. We can also run a Fibonacci retracement from here. This swing low on the week of 23rd October 2023 going up to the all-time high. I believe there may be a 23%. Okay, all right, we can see that the Dow has already gone underneath the 23.6%. So let's not use that. That's no longer valid. However, we could see a pretty decent support area at about where the 38.2% lies as well. We can see the bottom of this wicks here touching this level before bouncing higher. So this could be another pretty decent support level for the pound. So let's keep 38.2%. And the next major support is this previous all-time high here, right? At about 36,570, which is also where the 58% Fibonacci sits. So let's just keep 38 and 50. Right. Okay. So these are the levels here. Now, okay. Now let's just see what if Dow Jones breaks above the first resistance here, which is the all-time high. Where can we identify another suitable resistance level, right? Because we don't have anything in the past to reference. Because of course, if this is the all-time high, there's nothing that we can reference in the past to identify as major swing high resistance or pullback. So in this scenario, we're going to try a couple of things. First, we'll start with Fibonacci retracement from here. Jan 2022 going down to October 2023. We're going to try and use extension levels. The key extension levels lie at 127 and 161%. Extension levels can be used to help us identify potential areas of resistance in a scenario such as this. So we can see the Dow has already gone past 127%, so this is no longer valid. So we'll just keep 161%. This could be a potential resistance area here. Now we can also try and use a Fibonacci projection. A projection involves 3 points. So the first point is going to start from here, March of 2020, going up to the high here on the Jan of 2022, and ending with the low here, 0.3 on October of 2022. We can see that the 61.8% projection aligns very well with the all-time high. So let's keep that on. And we can also see that the 78.6% projection also lies quite close to where the 61.8% sits. So let's just adjust the labeling. Right, and we can now identify the next potential resistance zone for the Dow should we see it break above its all-time high. So that means if it does break above its all-time high, this level at 40,056 could potentially function as a pullback support, while the next resistance is likely to come in between 42,000 and 43,000. Right, this is how we can use a combination of Fibonacci projections, which involves 3 points, and a Fibonacci extension, which uses the retracement tool to help us identify a potential resistance zone. Right, okay. Now that we have that in place, okay, let's zoom on down to the daily first. Right, okay. Now that we're on the daily, we can see this a little bit better. So I'll adjust my first support to match the body of the candle here. And we can see that the 38.2% also is a pretty decent support level here. We can see Dow bouncing off 37,130 on December of 2023, as well as mid-Jan before bouncing higher. Okay, so I think this is quite clear in terms of resistance and support. Now let's see, we can run one more retracement here, this time from this all-time high down to the low. Was this last Friday? No, this was on April 19th. April. Let's pull up all the Fibonacci retracements. So when we pull up the retracements here, they're going to help us identify potential resistance areas. So we can see 61 and 78.6 are still sort of valid. And you can see the Dow is being restrained at around the 61.8% Fibonacci retracement, right? We can see it is clearly being restrained around this level here. And we can also see a little bit of a pullback resistance here that occurred in the second week of April as well. So should we see this level break higher, right? Then of course that would give us more confidence that the Dow is going to try and at least recapture or at least retouch the all-time high again. So take notice I would say the Dow is at a pretty critical juncture based on technical analysis because it has stalled at around the 61.8% Fibonacci retracement. And should we see it break above this, that's great. And also, I also see another intermediate pullback support or overlap support here. Right now, this support level is going to be pretty key as well, 38,588. If we do see a pullback occur, I would like to see it hold above this level. Right, this is a pretty decent overlap support at 38,588. If it does hold around this level, we could see a potential rebound, and that would be what's needed for it to break above the 61.8% retracement. But for now, these are the two critical levels to watch out for the Dow. It'll give us a better indication of what's likely going to happen. So if we do see it break below this intermediate support, then we have a potential drop all the way down to the first major support at 37,754. Right? Okay. Let's go on to the 4-hour time frame and see if there's anything else we can fine tune. If you can fine tune the analysis. No, I think this is pretty much fine. So take note, right? These two levels between 38,585 and 39,100 are is going to be a pretty important zone for the Dow and are key levels that you should watch out for the remainder of this week and perhaps maybe even at the beginning of next week as well. Okay, now let's move on to Nasdaq. Okay, so let's do Germany 31st on the DAX. So on my instrument here is Germany 40, right? So similarly, let's start on the weekly time frame, or rather, let's do it on the monthly. You can see Dow has sorry, not Dow, DAX I think has just surpassed its all-time high. As has it 18,000? Yes, it's attempting to surpass its all-time high, right? It has had a strong month so far in May. After pulling back quite sharply in April, it found decent support around 17,800 before rebounding pretty strongly at the beginning of May. And it is currently attempting to break above its current all-time high. Right, okay, now let's go on over to the weekly. Right, yep, this was the all-time high that took place in the first week of April. and it does look like the Dow is going to try and break above this level today. Okay, so with that, let's see, you can run a Fibonacci retracement from this swing low, October 2023, going up to the all-time high. Is there a 23 or 30? Yes, we have a 23% here, which aligns well with this pullback that occurred in mid-April. So quite clearly, 17,781 is going to be our first major support. And the second major support looks to be this overlap level here at 16,531, which also has the presence of a 50% Fibonacci retracement. So these are the key support levels for the DAX on the weekly time frame, right? We're using 23 and 50% as additional arguments to the significance of those levels. So let's just keep 23 and 50 here, right? Okay, now similarly for the DAX, there's nothing else that we can reference in the past. There's no pullback resistance or swing high resistance that we can reference from the past to try and identify the next resistance. So similarly, we're going to use a combination of Fibonacci extensions and projections. So let's start this with a projection first. In this case, let's start with a projection starting from here, 0.1 October 2022, going up to July 2023, ending at October 2023. Right, we can see quite clearly the DAX has risen above 61 and other projection levels at 61 and 78.6%. Let's see where the 100% sits. Right, 100% is here, which is at about what is this, 19,310. So this is where I would identify the second resistance here based on a Fibonacci projection. What else can we do? Can we do a retracement or an extension? Perhaps we can. Let's try it from here, January 2022, going down to the low of October. Remember, key extension levels sit at 127 and 161%. Clearly, we can't use 137 anymore, but we can use 161. So let's just do that. And now we have identified the next major resistance zone for the DAX. Right, this is clearly a major resistance zone here. So should we see DAX break out of this, break out of its all-time high, there's a pretty good chance that we may see it at least come close towards 19,000. Right? Maybe it's not going to come exactly into this major resistance zone, but at least we could see it attempt. We may have enough momentum to see it come close towards 19,000. Right, so this is how another example, right, of how we can identify potential resistance areas using Fibonacci extensions and projections. All right, now let's move on down to the daily time frame and see if there's anything else that we can adjust or identify or fine tune. No, probably not. So take note, this is a pretty critical juncture for the DAX, right? If you have gone long on the DAX since last week or beginning of this week, right? Maybe this is a good area to identify once more as a potential take profit level. Perhaps there's a couple of things you can do. You can either take out half of your position at where price is currently trading, where the index is currently trading, or you can also raise your stop loss as well, trail your stop loss to at least about 18,300, right? Just above this pullback level here. So this, I see a pretty decent intermediate pullback support level around 18,300, right? So if you do not wish, if you have gone long on the DAX this week, you can there's a few things you can do. One is you can take out the position entirely, of course, here at the all-time high. The other thing, second thing you can do is take out half of the position and let the second half ride. And if you were to do that, raise your stop loss to at least this intermediate support level at 18,300. Right, and continue. Or if you do not wish to close out the position, you should at least trail your stop loss and bring it to about 18,300 to at least lock in a little bit of profit as well, right? So take note, we are at a pretty critical juncture for the DAX as well, based on current price action. Now let's look at it on the 4-hour time frame. Right, it is attempting to break out of this level once more. Right, it is attempting to break out of this level once more. It's going to be a pretty well, pretty interesting to see how this plays out. So there's 3 things you can do with regards to the DAX. All right, hi Trevor. You can, okay, with regards to Fibonacci lessons, right? You can go back, you can go onto the YouTube page for IronFX and look for the past Fibonacci masterclass videos, right? They've been uploaded onto the YouTube page. for at IronFX. So do look out for that. And yeah, you can watch those videos at your own pace. Right. Okay. So these are the key levels for DEX as well. Okay. Now let's move on over to the NAS 100. All right. NAS. So they'll use this 100. Right. Similarly, we'll start on the weekly time frame. And we can see here the all-time high for the NASDAQ 100 was formed at 18,467, right? So quite clearly, that's obviously going to be the first major resistance here. And we also see price finding strong support at about 16,980, about 70,000 here, right? I see a pretty decent overlap level here, right? So this is going to be the first support. And this was the previous all-time high for the NAS that occurred on November of 2021. So this is a pretty strong support zone, I would say, for the NAS 100. Now we can see it attempting to recapture this all-time high again. Could it take place? Maybe it can. All right, but before that, let's try and identify. Let's use a Fibonacci retracement and try and add some further supporting arguments to our support levels. Right, we see a 38.2% Fibonacci retracement aligned pretty well with the first support, and I see the 61% at another major swing high resistance as well. So let's keep 38 and 61. So the second major support level that I see for the NAS is at 15,794. Is a level that where there was a previous swing high resistance that occurred in July of last year, and there was a pretty decent pullback here that occurred for a period of 3 weeks towards the end of November as well. This is going to be our second support. Now, similarly to the other indices that we covered, should we see the NAS break through this all-time high, where could we identify the next major resistance level? So once again, we're going to use a combination of Fibonacci projections and extensions. Let's pull up all the fibs first, projection level. So you can see quite clearly the all-time high sits around where the 78.6% is. And the next major resistance could come in at about the 100%. So let's keep 78.6 and 100. And for now, I'm going to highlight 19,557 as the second resistance. And perhaps there's an extension level that we can use as well. So to find an extension level, we'll start from here, a retracement from here, November 2021, going down to the low October 2022. Remember, key extension levels are at 127, 161%. Once again, we have the 127 extension and 78.6 projection lined up very well. We have a Fibonacci confluence here, which helped us identify a potential resistance area when price broke above its previous all-time high that was set in November, right? So we have this here, but of course we can see 161% extension is clearly way too far from where the index is currently trading. This may be useful this may be a useful level to reference in the future, but for now it's simply not relevant. So let's just get rid of it and keep 127. So based on what I've seen so far, using projections and extensions, I think the next major resistance that we can identify for NAS 100 is going to be at 19,557. Right, okay, this is this on the weekly. Let's go on down to the daily. Right, so similarly to the DEX as well, the NAS has rebounded pretty strongly since Monday, or rather since last Thursday, right? Has rebounded pretty strongly since last Thursday, and it is thus it does seems to be kept or being restricted around 18,000, yeah, around the region of 18,000 as well. So take note, yep, if you are going to continue, if you have gone long on the NAS, trail your stop loss, right? Trail your stop loss here. I see a pretty decent overlap level at around 17,790, right? This is a pretty significant overlap level here. Now, if you have gone long, I would say raise your stop loss or trail your stop loss to at least this level here, so that you can lock in a little bit of profit should we see a bigger correction take place, right? We may see a pullback. It may very well bounce off the support level and resume the uptrend. However, if that doesn't take place, if this support level at 70,790 doesn't hold, it's quite likely we're going to see NAS pull back even further, and where you could find the next support is likely to be around the region of the 70,000 here. All right, okay, we still have time, so let's cover gold. All right, let's cover gold now. So the ticker symbol for gold is XAU USD. Right. So once again, let's look at it on a weekly time frame to truly appreciate how strongly gold prices have risen this year, especially from the second half of February. Right, we've had about 2 strong months of strong gains in gold, with quite clearly the all-time high being formed at or being identified at $2,431 per ounce. Okay, before that, I just want to highlight this level here. 2035 was previously a very significant resistance level, right? This was a multi-string high resistance that occurred on August 2020, March 2022, May 2023, and as well as December 2023. You can see this was previously a very significant multi-swing high resistance, which clearly has been broken. But this is a major support level to be aware of. It's not going to be my first support, but yeah, just for now, I'm just going to label it as support. So just bear in mind, this is a level that we should be to take note of. Right, okay, we can also run a Fibonacci retracement. Here, let's start the retracement from this swing low, October 2023, going up to the all-time high. Let's pull up all the fibs, right? We can see that gold prices does seem to have found support around the 23.6% Fibonacci retracement. So I'm quite inclined to identify this level at $2,307 per ounce as my first support. That's a pretty decent consolidation here as well in mid-March that lies around the 38.2%. So I'll label this as my second support here. Right, so for now, we'll keep 23 and 38 and 61% as well. So 23, 38, 61. Right, okay, so these are key levels for to watch out for gold. Right, we could see now, should we see demand for the dollar continue to remain strong? Remember, demand for the dollar has picked up this week, right, which has kept gold prices under restraint, right? So should we see dollar index rise strongly today and tomorrow? This first support could give way, right? So take note, this first support could give way. Should we see dollar strength continue to resume or continue to grow stronger? Right. Okay. Now this is on the weekly. Let's move on down to the daily. Right, so we can see quite clearly that this is a pretty decent pullback support level at around $2,285 per ounce. And at the same time, we can also see that 2,337 has functioned as a near-term or recent resistance since the end of April as well. So 2,337 is an intermediate resistance that we should be aware of. And this for the first major resistance, I'll just take the body of the candle on the daily time frame. Right, I'll just on the daily time frame, I'll take the body of the candle and identify my first major resistance. Now, you can see since 23rd of April, gold prices have sort of consolidated between $2,284 per ounce and $2,340 per ounce. So it's pretty much gone nowhere, right? You can we can probably play the range in this sense, right? If should this precious metal continue to trade here, that means if it comes to the first support and we see it rebound, we have a potential short-term long opportunity, and we can target the region close to the intermediate resistance here as a take profit zone. Conversely, should price reach this take profit zone here, I mean this intermediate resistance level here at 2,340 and reverse and start to drop lower, it may help us identify a potential short entry, and then we can target the first support as a suitable take profit level. Now, because we have unemployment claims coming up later today, So if claims are going to be weaker than expected, that means it's going to be bullish for the dollar. So that means gold prices are continuing, or likely to drop lower towards the first support here, and perhaps maybe even break below a little bit, a break a little bit below the first support. Conversely, if the claims come in worse than expected, that means they come in higher than the estimate, we're likely to see gold prices at least consolidate and perhaps make an attempt to rise towards this intermediate resistance here. Right, so take note of how claims can also impact the direction of gold later today. All right, okay, so this is what I have for today. All right, I still have time for one more request. So should you have any other requests, please do drop your questions in now. I'd be more than happy to go through one more analysis before we wrap up today's session. And in the meantime, I'm just going to launch a poll as well. Truly appreciate it if all of you can give your feedback with regards to today's webinar. All right, just keep the poll running for about 10 more seconds, and then I'll close it. All right. Thanks everyone for the great feedback. Truly appreciate it. All right, okay, going to close the poll. Right. Okay. Are there any questions? Let me see. I think I saw a couple of questions pop up. All right. Okay. Hi, Trevor. All right. Okay. Well, oh wow. Okay. I got into the world of trading and investing actually after Lehman Brothers. Yeah. So back in 2008, 2009, I started taking more a keener interest in financial markets, doing a combination of longer term investing as well as shorter term trading before finally coming into this full time at about 5 years ago. Now coming to about 5 years ago full time. All right. Right. Thanks. All right. Thanks, everyone. Most welcome, Shadi. Most welcome, Trevor. And let me see. I think I may have found the YouTube page. All right. I'm just going to put this here. All right. This is the IronFX, the YouTube page for IronFX. I'm just going to drop this in the chat as well. So head on over here, and I'm sure you'll be able to find the past videos on Fibonacci retracement as well, right? We've got a few others as well, like multi-time frame analysis, and how to trade like a full-time Forex trader, and so on and so forth. So do look out. Go head on over to this website and look for the Fibonacci videos as well, the Fibonacci Masterclass series on this page. All right, thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IronFX. I wish you all the best in your trading journey. And take care and have a great week. I'll catch you all at the next webinar. Thank you.